week is the 16th to the 20th. Let's take a look at everything. Risk disclaimer, we know there's risk in trading. Please always use trade capital only. Do not trade with money you cannot afford to lose. What is trading stocks, options, futures, forex, cryptos, you know the deal. Social media, best place to find me is here on the YouTube channel, youtube.com/Chris Pulver. Verified Twitter account @Chris Pulver. Also a free Discord channel, Chris Pulver Trading, and I'll share that link in the YouTube chat. All right, let's jump into the calendar. We took a look at this last week on Friday when I wrapped everything up. So we have some CPI data coming out this week. I'm just looking at high impact news. So CPI out of New Zealand, policy meeting minutes out of Australia, employment news. This is actually unemployment claims out of the UK. CAD CPI, core retail sales in the US. We've got some Chinese news. CPI out of the UK. That'll be on Wednesday. And employment numbers out of Australia on Wednesday night, which actually is going to be Thursday's trading day. Unemployment claims Thursday out of the US. Powell speaking this week on Thursday at noon. I'm guessing some fancy lunch. Economic Club of New York luncheon. There you go. And retail sales for the pound on Friday. So not nearly. I mean, there's still some heavy hitters this week. CPI news will be a big one to see where those trends are going. If central banks are going to continue to plateau and pause with those rate hike cycles. But last week was a pretty interesting week. We had a huge jump. Monday, Tuesday. We had PPI data, US CPI data as well on Wednesday, Thursday, and we had two pretty heavy selling days last week on the market. So the SPY was sitting. Oops, that's not the button I needed to push. The SPY got up as high as 437. 437. Get out of here. There we go. 437 last week highs and came all the way back down towards 430 and 431. Here we are, 434. So likely positioning this week. We had a nice little credit spread win above the 432. We took partial profit on that. The close on Friday was 431.50. So I'm really happy that we closed it out. Able to grab some partial profits and finish the week on a solid note. This week I'm kind of looking at maybe some indecision. Let me log into the YouTube channel, by the way, just to say hi to everybody. All right, we are live. And morning, Alex. Good morning, David. Good morning, Don. Happy Monday. And we're live this morning. Let me post this in Telegram really quickly. Let's get some more peeps in here. Okay, post it there. Post it there. There we go. Okay, so what I'm considering for this week, probably some, neutral positioning, try to be profitable, whatever price gives us. I would imagine that we have, as always, kind of an up, down, sideways potential. So this previous resistance right here, I'll be watching closely. To the upside, I mean, we could still reach 444, 445, which gives us about a $10 move on the week. I'm looking at probably some positioning where, delta traders, if you want to come out with me to, maybe a 25 to 30 delta and look at one long call slightly out of the money here, one long put, maybe a straddle this week. And then we wait to see if there's a good opportunity to trade intraday and switch up the expirations for a 0 DTE. So I don't see a lot of U.S. drivers this week in price. We do have big monthly expirations. I'll look at the big open interest levels. The gap fill would technically be up here towards 438, which we didn't hit last week. I know that it was in the gap. It didn't necessarily close it all the way. So, like I said, I mean, positioning wise, if we're going to 444, I think we could do something like a 438 or 439 and have that be worth, maybe $3, $4, $5 and give us a 2.5 to 3x return on a straddle. If we get a good intraday move, then we can take that as it sets up. Okay, but I just think we could have a little indecision from this high to this low. Breaking back down to retest lows is possible. Breaking back up to fill this supply zone and hit this channel resistance is possible. Is that all happening this week? I don't know. Okay, so a couple of things we might do is take the straddle opportunity and then also look at a potential neutral trade where it might cost us 30 to 40 cents, but if we're right, we could probably make $1.50 to $2. Last week we were dead wrong on a butterfly spread, and it ended up costing me about 20 cents. So it wasn't a loss that was just unbelievable. It's like it was tiny. So we ended up making some good profits on a straddle as well as some single day options. Okay. Morning, Angela. Morning, Catherine. Morning, Willard, Jacob, Chris, Donna, Andrew. Good morning. Nice to see everybody. All right, that's the SPY. Let's go to the Qs. They're starting to look a little bit different. Here's the QQQ. I still think that the Qs, we had a little bit more of a channel resistance hit on the Qs. Kind of looking at this candle here, since we had such a large weekly candle, or this is a daily candle from Friday. Wow. So Qs wise, I mean, if there's a couple ways I'm looking at this. If this is resistance right here and we hold it, then coming back up to hit and then reject, I'd look for, something we can take more intraday. But if this is a bullish setup where prices had this big rally, we're getting some indecision, we might head down one more time. And I still think this 200 EMA is up for grabs. It's not an extremely high bar count from when the last time we touched it. It's like 150 bars, but the distance away that it was, I think, is enough to at least pause the market like it's been doing. So I wouldn't be surprised if there's more indecision and this kind of channel and wedge kind of plays out until this 200 is hit. And to me, this 200 becomes a line in the sand. So this exponential moving average either is the break into the sell zone, or this is where the bulls will defend, and we start to see maybe a holiday rally. So we're not that far away from being in November, to be honest. I mean, it's the 16th today. We're going to be, we have 2 full weeks of trading left, and then we wrap up the month on Tuesday the 31st. Holiday times, I mean, if we're not getting it kicking off into October, certainly like middle of November, I mean, we're expecting to see if there's any type of Santa Claus rally or holiday rally, lower volume in the markets. We're going to start getting that sooner rather than later. So just stuff to keep an eye out for. Okay, so we will be watching and how to position accordingly. Some stocks that we'll be watching. I mean, I think we just kind of keep an eye on the Mag 7 and Enormous 8 for right now. If they're performing well, the markets will do okay. We have a lot of straddles on those. They're actually credit spread straddles. Amazon's back up to 131. Some diversification with materials. We're trading back down to 27 on Alcoa. Pfizer, little pharma. Nice move there. So news cuts full year 2023 revenue outlook amid lower than expected utilization for COVID products. Also another big pharma all about COVID, huh? This is a decent bar count. I like this 200 EMA for a potential trade back to it. We're now sitting around 194 bars on Pfizer on the daily. And if you look at this chart, I mean, all these little red translucent boxes are all supply zones. So I know that right now, I mean, there's no reason for me to be super bullish on Pfizer, but eventually, once we start looking at some structure in here, we start to head back up towards this 200 EMA. If we break above that, I think we got a decent buy zone. But the broader market is likely going to have to get lifted up. We might see, what we've been noticing is risk on, risk off. Risk on has been, everything's been green. So we've actually seen some decent market breadth on the green days. On the bad days, it's either being dragged down by the biggest stocks or it is being like held and stabilized by the biggest stocks and then sold off everywhere else. So it again, it's still weird that essentially you're being, 500 stocks being controlled by 10. So I don't know what the major consequences of that are, because those big stocks could be enough to create a bunch of resiliency in the markets. At the same time, if they turn red and drag everything with it in a fast way, I mean, I think that's what's happening here. Is our S&P right now is you have, your biggest stocks in the world that are fine. They're stable. They've had a great first half of the year. They'd be up, anywhere between 25 and 50% for the year. But your overall market is now up maybe 10%. So the market breadth, the overall market, the 490 stocks plus are dragging things lower. And I think that the guidance and the outlooks are not great. And we're going into earnings season here shortly, probably over the next 3-4 weeks. We'll have financials kick things off, and it's just going to be how are earnings. So we kind of know the interest rate scene right now. So how are earnings? Are they positive, negative? What's the forward guidance? What's the outlook? Maybe this round of earnings season doesn't necessarily have a lot to do with AI. Maybe it will. Maybe the market gets excited about it, but I feel like it's not. I feel like AI kind of had its pop early in the year, was enough to push things higher, get a little bit overhyped, and I think we're just kind of seeing what the market's going to deal with as far as the reality goes. Okay, currency strength wise, so New Zealand on top, Aussie on top. Actually, it's kind of my favorite setup right now because the Swiss is weaker. So we should be starting to see some better positioning. I'm going to log into my portfolio builder account. See how that's looking right now. That should be a nice little turn in our favor. Pound is up, Euro's up, CAD's up. We have dollar and yen and Swiss on the weak side. So it really is just a good risk off currencies to the downside and then risk on to the upside. So if that holds for today, that's good. I'm just going to see where my positions are at for my trading account. Let's go to trade, log in, check that out. I'll do a quick check on the pips, and we'll move on to some currencies. If you have any charts that you'd like me to take a look at, just type it in the chat. Okay, Aussie Swiss there. I'm showing balance-wise, I've improved the drawdown a little bit. Got some rollover profits over the weekend. Pip-wise, I'm still down slightly on those pullbacks. Plus 13, minus 104, minus 98, plus 5, minus 26. Okay, so I'm down. Is that right? Nope. It's not 522. I'm down minus 51, plus 12, minus 105, minus 98, plus 4, minus 27. I don't know what. There, I'm down 265. Okay. So I had some pullbacks. We had a great class on Friday to get everyone caught up with some decent pullback levels, some market orders, some pullback levels. I'm down 265 pips. But the nice thing is, we talked about this on Friday in the portfolio builder class. If I go back up to where I was, it was about 3 weeks ago. I was up 600 pips on this account. So if I'm up 600 pips with a current position sizing that I have, I was up about $400 at this time. When I had 600 pips of profit, I was up about $400. Now with my total trade sizes, I'm in for about 11.5% margin, and my trade sizes overall, I think it was just over four mini lots. And anyway, if I'm up 600 pips now, it's going to be roughly $2,000 in profit. So if we start to see, we had a push, we got position on that, we're getting some pullbacks, we're getting position on that. If we start to see a wave count where our third wave kicks in, then our profit swing is going to be much bigger. So to go from negative territory back into positive is going to be a big swing in dollars. And if we get back up to where we were pip wise, which isn't that far away, our dollar amount and our percentage on this account is going to be way bigger. So again, we'll see. A lot of it is Swiss related right now, and we have class today at 4 p.m. on Portfolio Builder, so we'll continue to kind of patiently wait out our positions and see where it's best to enter. So just want to check on that really quickly. All right, RG will do Dollar Sing. Dollar Sing, I am out of it. You should know that if you're with me in the trading room. So Dollar Sing's at 36.95. We're right at that yearly pivot in the middle. I've talked about this. We closed the trade up, right? I was long here, long here, long here, long here. So 5 positions. I closed it up right around that yearly pivot, just shy of that. At this point, I'm no longer interested in the Dollar Sing. I mean, if you're wanting to see, okay, this is wave 1, this is wave 2, maybe this is wave 3. There might still be a 5th wave that gets us up into this yellow box. But for me, I'm less interested in that trade outside of if you wanted to participate, maybe putting a stop loss just below this low around 3,500 or 3,450, and then going back up into like 39 or I mean 3,900 to 4,000. There's probably another spot left in that trade. But for me, after positioning in and taking almost 2,000 profit or 2,000 pips of profit, I'm kind of done. And now I'm looking at this as if I can sell it high, I will. If I can buy it low, I will. In the middle, I really don't care. Because if it's in the middle and it's noisy and it's, taking out lows and taking out highs and it just gets really messy in here, I don't want to be stuck in that trade. So, and if I started to position here and I'm saying, okay, well, I'll buy it and then I'll buy it again and then I'll buy it again and then I'll buy it again. I mean, I'd rather just wait and see if we could get a much lower price where the probability of risk reward is in our favor. So that's my thoughts. If you missed the Dollar Sing, it's okay. We can find another one, but that trade is done. So I was in early on the equal lows and then took profit near the pivot. So all I was looking for was 1, 2, 3. Got it. Okay. Good on that one. MRO. Is that Marathon? At 28, I think we have some exposure on this one with a credit spread. We had like a 28 by 27. I don't think we were assigned. This is equities on demand. Let me just double check and search for MRO. I think we have some credit spreads out to Q4. Let's see. Yep. MRO, we did a long call. That must be an older one. That's older. Okay. There we go. So we have an October 20th, 27 by 26. That's a credit spread that was filled. Right now, price is trading at 28.21. So that's this Friday's expiration. That should be profit. We'll manage that. And we have a lot of these actually. If I type in 1020 for my search, we're going to have probably 30 to 40 expirations this week. But some of them have already been managed. Some of them have already been assigned. And we'll do that today in this week, or probably today, tomorrow when equities on demand. So what I have here is a 27 by 26. That's in full profit, or it's getting into profit. It's going to be full profit by Friday as long as price stays above 27. And then we have them out to January and June. We staggered out what we could. I don't know if we got filled on this June one. This might be still pending, but I'm still going after. It's a $2 spread trying to get filled for $1.10. We can check on that one today. See if it got filled. It may not have been filled, but the recent low, I mean, we should have been filled on that. That's possible. That was October 5th, and yeah, I mean, I don't know, $1.10 would be great. So I'll check and see if that one's filled. But MRO and some of these energy plays, I mean, we're on the right-hand side of the trend line, which is nice. I mean, we've been waiting for this for a while. So having this head up a little bit, dip, and then a big rip to the upside, I mean, we'll look and see, what the news is, what the earnings play is. So right here, we have Wednesday, November 1st. So again, you're going to start getting into some heavy earnings season in the coming weeks, and that combined with a holiday environment, we're going to be looking for some type of sustained direction. If we get it, there's a time and a place to be, aggressively bullish or aggressively bearish. It's just let's see what type of direction we can get. All right, that's my MRO outlook. Swiss yen, DPS, who's asking that? We're trading up to 165. I would just chill on this one. I mean, this is what I talked about last week in the flex room. If we have a head and shoulders, this is a head and shoulders potentially, okay? But something about this, we might either come up and retest the high, we might go up a little bit higher, and then start to come back down to the neckline and then maybe set up like an uglier head and shoulders. I'm not sure, and I've talked about this for several months now. It's like I just don't trust the yen pairs that much. And the bigger move to the downside, because we're in a positive carry environment, the JPY, unless the BOJ changes interest rates from negative 0.1 to something positive, I don't see the overall market jumping into JPY strength. I could see levels of intervention. I could see the 150 level being defended by the BOJ, and the dollar yen drops, and it does it like it did here. I mean, we got filled on that little flash crash move, and then all of a sudden price goes up and takes out a high, so we got stopped out. So I'm just waiting. It's like I want to watch and see, do we respect the highs and then head back lower? I still don't love this trade either, because that just makes me more nervous that there's no real direction. The bulls could still break it up here because we had this huge posturing to the upside, or the bears could obviously reprice and rebalance. So I just remain neutral. Like, I don't want negative swap in my account. I don't want stupid volatility, and I don't want to be sitting on one side thinking like it has to be a sell trade. It doesn't. If the Bank of Japan is going to do nothing and just keep interest rates negative, I'm sorry, but there's still room where all the yen pairs can weaken. I mean, if you want to look at a historical chart on the dollar yen, it goes back to 175, 180, not 150. There's no guaranteed top at 150. So I just don't think it's wise that we call tops on JPY crosses. We watch the setups, we look for some structure, we'll take some stabs. The good thing is, if we're right, we can make a lot of money to the downside. If we're wrong, we try to lose quickly. If we're right, we can make some money here. I just want to see if there's, more legs to the upside. Okay. All right, that's a good question though, and that's obviously a lot of traders right now are looking for JPY crosses and kind of, looking for confirmation. Like, am I right? Am I going to get a sell trade that I want? I don't know. I mean, honestly, at this point, if you're in the yen crosses, I hope you're not in heavy. I hope you're not over leveraging, and I hope you have stop losses in play just in case they don't cooperate. There will be a time and a place where it works. I mean, seasonality wise, we had a great sell off last year finally after like 8, 9 months of trend. Then we finally had like a 3 month sell off. So, and when it does rebalance, it does it aggressively. So we can still pick our windows where we can time it well. I just think it's silly to call tops, call bottoms, force trades, and certainly on the JPY crosses, over leveraging is a bit of a nightmare. Okay. All right. Don, is that a stock? FLNG? Flex? Did my trading room go public? Just kidding. I've not seen the stock before. Transportation, marine shipping. Okay. Liquefied natural gas, headquartered in Hamilton, Bermuda. Let me do a quick spot check on some fundamentals. So FLNG. This would be my concern. Okay. Dividend not well covered and high debt. Okay. Margins lower than last year. And earnings to grow 4%. That's pretty low. So if the dividend's going to get chopped down, that's a big reduction. Maybe kills consumer or investor confidence. High level debt in a high interest rate environment is not ideal. So I mean, I wouldn't be opposed to trading options around it, but if I look at this stock, I mean, we've essentially rallied from $4 after the COVID crash, and I don't know. I mean, I would maybe watch something like this and see if this corrects a little bit more. If it channels a little bit lower into some of these demand zones, something in like the mid 20s, I'd be pretty happy to take a stab at it. We have some decent structure in here. So, yeah, I'd say like $24, $25. I would probably look at some option trades, but I don't think I'm comfortable owning the stock with those type of fundamentals. So, is that the one you're talking about? Did I get it right? FLNG? But what you could also consider are their competitors, right? So we have Flex LNG, then we have Global Partners, tankers here. I mean, 1.5 billion market cap, 1.1 billion market cap. Those are a little bit bigger. 1.7 for Flex, but I like the fundamentals here on Global Partners and TK. But if the price is high and doesn't set up technically, then it's just an at a glance overview. Yep. Okay, cool. All right. Any of the charts, any of the questions? Let's go oil, gold, silver, dollar really quickly. Go back to the daily time frame. Oil, high volatility, still kind of up in the air. Are we, coming back to retest the highs at $93, $94? Is this conflict going on in the Middle East right now going to be an issue, or are we still going to see stabilized prices in oil? This is where things get really ugly. If price gets above $100 and doesn't look like it's going to stop, that's going to be really nasty. Price comes back and stabilizes. There's still strong support here at 75. So look at this 200 exponential moving average, by the way. Up here, pull back, up here, pull back. If we have another leg coming up higher, I mean, I said this, if you're buying it off the 200 EMA, that's pretty decent. Stop loss right below it. So there's still some potential reward to risk up towards the yearly pivot at $93, $94, which gives you another $7 to the upside. But again, high volatility. I think we're going to have, and I've been talking about this for a while, but if we have some type of range, either a range like this or even a range like this, something like 95 to 65, something like that, where there's a big supply and demand zone. Gold and silver, just watch the dollar, right? Gold took a big old rip. We said that it could if the dollar dropped, and it did, right? So when the dollar dropped in a couple of days, gold finally made that move to the upside. Now, what's nice is this right here, and this looks actually what I was looking for silver, which is a big old rip to the upside. If gold pauses right here, gold bulls are going to love that trade. If this is a bull flag that's setting up, there is potentially a 1950 to, let's say, 2075 breakout ahead. So what I want to make sure that we see on gold is that we don't just chew up this big bullish candle. You see that right there? So if this huge candle becomes like red, 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 and takes out that low around 1875, it doesn't look nearly as good. But if we have this big bull candle and it pauses for a couple of days and it just looks like a minor stall, then I'd say the bulls look better and the dollar index is probably going to drop. So that's a nice turn on gold, because initially when we were talking about getting long on gold, it would have been back to this level here. And so that would have been a nice little profit taking in the short term. Silver, hopefully silver popped up to that same type of postured move. It's not quite there. Okay, I needed silver to be up here. If silver can get up into this area and also do the same type of thing, silver looks pretty good as well. So silver and gold, I want to look for some bull flags. Dollar index. Dollar index, you can make this trade really simple. This is high to low. I'm not sure if it's going to be just immediately lower high, lower low. I'm not. But I would say if you're short the dollar below 105.50, short the DXY, that's a pretty solid play. There's a lot of potential to the downside in a broadening pattern. The issue would be that, we still have some uncertainty and maybe this thing shows some indecision, like so, right? But I think it's pretty clear that if the dollar's closing below 105.50, I would take a stab at that and look for some risk on with other currency pairs, or at least just look for dollar weakness. So to me, below 105.50 on DXY is sell the dollar. Currency pair wise, I would buy the euro, I'd buy the pound, I'd buy the Aussie, buy the New Zealand's. I would be in a lot of currency pairs against the dollar. JPY, honestly, I might just leave it alone. But probably the other 5 or 6 I would trade against the dollar. But that's below 105.50. Okay. Every time it's halved historically. Yeah, I saw it's up. It's up like 4% this morning. Yeah, I mean 29. Does everybody see this? Do you have the same feed that I do? Let me see if I can get a different BTC feed. So Bitstamp, Coinbase. Let me just check and see if that was a big spike. Yeah, so we had a huge spike up towards 30K. Well, there's some interest here, and that's out to March. Yeah, we'll find out. I mean, Bitcoin and crypto this year has been really weird. It's been big one-off moves and then just days and days and days of indecision. So, we've had this one surrounded where we have chart alarms here, chart alarms here. I did have that chart alarm go off at 29,000 with that spike. I mean, the reality is the bulls have to break above 31, right? We get above 31, get above 32, then there's room to come back and eat into this inefficiency here. So if we break above 32, we could head to 38 pretty quickly, right? And if we head to 38, I mean, why all of a sudden would it be like, oh, there's another 80% correction? I think that we start a bull market. If we break above 32, I'm way more bullish. And some of the other exposure, it's like, yes, I've got Bitcoin holdings. Yes, I have some mining stocks. Yes, I have some option plays. GBTC is just a hold like an ETF, and BITO. I mean, yeah, I'd love those. So yeah, we'll find out. I don't know where what do you have the dates handy on the other halving? I guess I could look it up and just see like when they happened, what was the result. But yeah, I'm just gonna stick to the technicals right now. It's here. If we get above 32, there's room to get to 38. If we get to 38, I'd say we're just starting a bull market again. We have this level of accumulation. We've been sideways all year for the most part after this initial run, and a break above 32 is just draw a trend line, right? Draw a trend line and just wait. If it hits up here and we have any pullbacks, I mean, we might have a channel, or this thing might just go ballistic like it's done in the past. So if it gets to 38 and just rips up here, I would be super excited to get prices back above 60,000. And there could be enough crazy momentum where this thing all of a sudden is eyeing 100K. So everyone that's just been patient and still been accumulating is looking at, if we hit 100K, that's a 4x return on just sitting. I mean, there's not a lot of stocks that have given us that return this year. In fact, none. I mean, Nvidia is one of the best performing stocks, and it did a 200% return this year. So if Bitcoin hits 100K, that's pretty sweet. I don't know if it's going to happen. I don't know if it's this year, but again, if we break above 32, I'm way more bullish than I am now. I mean, I was prepared for if it breaks below, we just head back down to 20 and we just stay in this range for as long as it needs to, right? 20 to 30, 20 to 30, 20 to 30. Now you can still trade that range, but to me, the big breakout is we get above 38, a new bull market starts, and then I would just eye the highs. We clear those highs. I think 100K is in the cards, just with sheer momentum. I mean, we were at 3,000 to 64,000. So it is not uncommon to go, there's 15. I mean, what's the return from, roughly 10,000? I mean, that's a 6x return. So if we started here at 16, it's going to be close to those highs, right? 16 times 6, that'd be at 96. So even if it matches this as far as return wise, 6x return approximately, 16 to 96 is pushing towards that 100K mark I just said. So yeah, I don't know. It could all be crazy and interesting. So we'll watch. April 2024, got it. EPH. All right, this will be the last one down. Then we'll start switching it up. Edison's Power, is that what you have? I mean, this price chart looks like crap, so I don't really know what to gauge on this one. Engages in the financing and operation of photovoltaic systems in Europe. So this is a green energy play that I don't know why the price feed's so crappy, but let me see if it pops up here. EPH. No. All right. Well, clarify then. I don't know. I don't know what it is. Oh, crypto EPH. You mean ETH? I don't have an EPH. You talking about Ethereum? All right. Maybe you're talking about Ethereum. I mean, honestly, Ethereum, Bitcoin's pretty much the only two I focus on. If Bitcoin's up, if Bitcoin is up, Ethereum's going to follow. And if Ethereum and Bitcoin is up, I'm pretty sure they still represent like 50+% of the market cap in all crypto. So, I mean, overall, it's like, look, if you're bullish on Bitcoin, you're essentially bullish on Bitcoin and Ethereum, in my opinion. So, technically speaking, I mean, I would just look at this. If a trend line breaks right here, if that trend line breaks, and we'd have to get above 2,000. Okay, maybe a safe close just beyond that high. But where's the next bull market? Draw a trend line out here, right? There's just a big wedge. So the clear move on the upside would be in this area and then open space, right? If we go from 2,000 to 3,500, we get to the highs back at 4,500. I mean, pretty awesome. I mean, that's almost a 2.5x move. And if we have the same type of measurement from down here and up, whatever that was from a return wise, I mean, we measure it from this level. Let's say it's 9 or 10x or 6x or whatever it was. This is I mean, that's a huge return. That's like 10x, if not bigger. That's a 12x return. So if we mirrored that from, I mean, 1,000 to a 12x return would get you up to, $10,000. I don't know if that's going to be the play, but here's hoping, I guess. So yeah, I mean, if you're bullish on Bitcoin, you're essentially bullish on crypto in general. And then Ethereum, Bitcoin would be probably one of your better performers. So stuff to watch for sure. Okay, I'm going to close it up there for today's weekly outlook. We'll be back on Friday. If you have any questions, let me know. Leave a comment for me. Hit the thumbs up button before you go. That'd be much appreciated. And let's have a good week in the trading rooms. Equities on Demand students, I'll see you in a minute. Flex Trading Room Tuesday, Wednesday, Thursday. Portfolio Builder class all week, Monday, Wednesday, Friday. And we should be good for the week. Okay, thanks everybody. I don't need to type this in all caps. Trading rooms. And then before I go, I'm going to post my Discord link just in case. Also, really quickly on the Discord side of things, so free group chat, and I also posted all my links for educational videos. So trading rooms, I've got a trial link if you're not trading with me during the week and you'd like to. For 27 bucks, you can get into my Forex trading room Tuesday, Wednesday, Thursday, and also my Monday through Friday stocks and options trading room, equities on demand. So again, I don't know why this is a typo when I typed in the link, but it's right here. So when this one says EOD, that is equities on demand. That's stocks and options. This one says flex. That's forex. When you click on the link, it'll show you that. But it's a 1 month trial for 27 bucks. And then I have all of my other classes here as well. Some of these are robots. They're all full courses. They all have strategy guides, videos, lessons, access to the online university, and then a video series that I did probably, I don't know, maybe 4 or 5 years ago. But evergreen, timeless. Some of the I mean, it's a ton of content for the survival trader video series. I think each module is like 1 to 2 hours. So check it out. And this one, I mean, this one you can download any video and stream as you want. These ones come with online university access and full classes, robot stuff like that. If you have any questions on this stuff, jump in the Discord channel. Let me know. Okay, so I'll post the group chat right here. There's the invite, and here's my Discord channel. Chris Pulver Trading Discord channel. There you go. Okie dokie. Let's have a good week, everybody. I'll see you in the trading rooms, and I'll be back on Friday to wrap up the week. All right, thanks. Bye.